What are the requirements for equipment financing? Let me break this down. There's a couple ways to look at it. First, are you a startup or are you an existing business? Okay, if you are a startup, it's pretty cut and dry, right? They want you to have other assets, other collateral to pledge. So a lot of times they want you to be a homeowner and they want you to have 700 credit plus. The other thing is they want to know, that the equipment you're buying is valuable. What I mean by that is they're probably not going to want to finance a piece of equipment that's 9-10 years old and that might break down. All right, so that's basically the requirements or the bare minimum requirements if you are a brand new business and you're looking to get equipment financing. I don't care if it's logistics, opening a restaurant, opening a yoga studio or a gym. That's what they're looking at. Do you have 700 credit? Do you have, what were your tax returns like? They will look at how much money you've made in the past, and they want to know if you're a homeowner. Now, if you are an existing business, there's a couple things, and these kind of vary depending on the strength of the entire application. What I mean by that is they're going to look at your credit, they're going to look at your time in business, they're going to look at your cash flows, they're going to look at your profit margins, they're going to look at the piece of equipment you're trying to buy. Now, if they don't all have to line up, but if you have really strong credit, really good cash flow, and you might be weak with your time in business, meaning you're not in business 5 years, you're in business 2 years, that will probably get approved. So what they're looking at is, one, what's your credit? So the lowest credit score I've seen get financing for equipment was 580. That's not typical. So I would say typically you want to be at least 650. I've seen it done 600 and up, but usually you want 650 or better. 700 plus credit scores get approved much easier and with much less documentation. Next, time in business. I've seen startups get done. I've seen people a year in business get done. Ideally, you want to be in business at least 2 years, if not longer. That shows that the business has almost made it past that point where most businesses fail and you're in a growth stage. Next, the cash flows. They don't want to see a lot of overdrafts in the bank account. If they look in the business bank account, they see a lot of overdrafts, that's going to be a problem because it shows that you really can't afford another payment. What I'll tell you is beyond that, they want to look at profit margins, so tax returns. So is the business profitable? If it's profitable, great. And then last but not least, the equipment. The first thing I'll tell you is there are different underwriting guidelines depending on how expensive that piece of equipment is. That 580 credit score that got approved for the equipment financing, the equipment was only $10,000. So it was easier to get financed. I think anything under 100,000 falls in one bucket. And what that means is it should be a very quick, easy, fast approval. You could do it with minimum documentation and hopefully, if everything holds up, get it done very, very quickly. Anything over 100,000 obviously takes a little bit longer and it's a lot more documentation. Now, one of the things to consider is the piece of equipment that you're getting. If you're trying to buy a truck, most banks don't want to finance a truck that's 9 years old or more. They don't want to finance a truck that has a lot of miles on it because it's more likely that that truck is going to break down, have issues, and create problems. Brand new pieces of equipment are much easier to get financed. Used pieces of equipment, they have to hold value and they have to be in lockstep, meaning if you're buying, let's just say, a wood chipper or you're buying a bobcat and a skid steer and you're paying $40,000 for it and they look it up and their assessment of it is $40,000, that's a good fit. If you're buying a piece of equipment for $40,000, they look it up and they determine it's only worth $20,000 or $25,000, that's probably not going to get approved. That really happens on the used side, that doesn't happen on the new side, right? So they want to make sure, one, it's not too old and it still has some level of value. The last thing that they are going to look at, how that piece of equipment is going to help you. They want, you have to buy a piece of equipment that makes sense for your business. If you're in logistics, getting a truck is not a problem. If you're a restaurant owner, buying new kitchen equipment is not an issue. You can even wrap in your tables, your chairs, and some of the furnishings that you're going to need. Now, if you're a sales office and you're trying to finance all your equipment, all your furniture, that makes sense. If you're a sales office and you're trying to buy a boat, they're not going to do, equipment financing for that. You'd have to go to a boat dealer, and you probably don't want that in the business name because the insurance is going to be crazy high. Next, when you're talking about the equipment, let's talk about what you need to apply. Typically, you need a one-page application, your most recent business tax return, your last 6 months of banks, and if you have financials along with the invoice for the equipment, meaning it's either a purchase and sale agreement that shows, hey, this is the make, model, VIN, hours or mileage on it. It has to be very specific, and this is how much you're buying it for, or if it's a new piece, it's just an invoice, right? If you have all that and it's under 100K, that'll work. Now, if you're trying to get a piece of equipment that's over 100,000 to buy, you're gonna need that application, the last 2 years of business tax returns, year-to-date financials, the last 6 months of business bank statements, the invoice or the purchase and sale agreement, so they can actually get a good idea and good feel on if they can approve you or not. So those are just some of the differences between getting something under 100,000 or over 100,000. And the whole process usually takes anywhere from 2 to 5 business days. It's pretty quick, it's pretty easy. The terms are usually 3 to 5 years with monthly payments, and you can pay it off early and save some money. So if you guys have any questions, go to integratedbusinessfinancing.com, and we have a whole drop down on equipment financing. Or if you have questions, reach out to me directly. We look forward to working with you.